Hey everyone, welcome to The Explainer. Today, we're diving into a move that could completely flip the script on a major cryptocurrency. We're looking at this absolutely wild contradiction playing out right now in the digital asset market. Basically, we've got an asset that lost a historically crucial support level, one it defended for 635 straight days, only to immediately bounce back by nearly 20%. I'm talking, of course, about XRP and its massive battle for the $1 mark.
So here is the million-dollar question for our investigation today. Is XRP actually reversing its downtrend and heading back into a full-blown bull market? Or is this just a temporary relief rally around a heavily watched psychological level? Because, in these markets, a sudden bounce above a key level doesn't automatically mean a long-term downtrend is suddenly over. To figure this out, we really need to strip away the hype and look at the actual data. All right, let's dive into it.
Let's trace this asset's dramatic fall over the course of 2026. Look at where we started. In the first week of January, XRP reached a high of right around $2.41. But then, it spent months just giving back those gains. Fast forward to August 11th, and the price hit a brutal low of roughly 99 cents. The very next day, August 12th, it recorded a daily close exactly at $1 flat. That was its weakest daily finish since late 2024. For the first time in over 600 days, that critical support was officially broken.
But here's the paradox. Just days after breaking that massive 635-day support streak, the market completely turned on a dime. Fresh reporting on August 19th showed XRP jumping up to around $1.11. We're talking a roughly 20% gain in just 24 hours. The exact same asset that just lost its most important psychological floor was suddenly and aggressively reclaiming it. So what exactly is going on here?
To solve this mystery, we first need to look at Section 1, a market-wide reversal as crypto climbs together.
You see, XRP didn't just jump 20% in a vacuum. While XRP rebounded, Bitcoin was surging past $68,000 and making a run toward the $70,000 area. Ethereum and other major cryptos, they were climbing right alongside it. This tells us that XRP's sudden recovery was actually driven by a market-wide shift in risk appetite, not some fundamental transformation isolated entirely to the XRP ecosystem.
So, if the whole market is moving together, we need to turn to Section 2, the macro catalyst, and ask, what moved the market?
Well, there's a massive macro catalyst playing out in the background right now. The U.S. Treasury announced a planned shift to double its long-end bond buyback operations starting in September. They're moving from roughly $2 billion up to $4 billion per operation. Now, you might be wondering, why does that matter for crypto? Well, this kind of operation injects massive liquidity into the financial system. That tends to lower long-term yields and vastly improve risk appetite across all financial markets. And yes, digital assets are absolutely included in that. Changing financial conditions created a really favorable environment, and XRP rode that wave. It's a great reminder that crypto doesn't operate in a vacuum. Macro liquidity really does lift all boats.
But macro liquidity alone doesn't explain the sheer violence of that price spike. Let's look at Section 3, short squeeze, and the anatomy of the spike.
FX Empire noted a massive spike in liquidations that basically acted as absolute rocket fuel for this rally. Let's break down exactly how this happens. Step 1. Traders bet the price is going to fall further below $1, but then the price unexpectedly rises because of that broader macro environment we just talked about. Step 2, the exchanges start liquidating or forcibly closing those losing short positions. Step 3, to close a short, you literally have to buy the asset back, which triggers a huge wave of forced buying. And finally, Step 4, all that buying pushes the price even higher, trapping even more short sellers, and the whole cycle just feeds on itself. A short squeeze like this can ignite a crazy powerful rally without actually proving the long-term trend has changed.
Knowing that leverage and macro forces are at play here, let's move to Section 4, bull, bear, and base, to outline the three market scenarios.
Look, a single 20% green day doesn't automatically confirm a structural reversal, so we've got three clear scenarios to keep an eye on. First up, the bull case. The trigger here is XRP successfully holding above that $1 line and clearing technical resistance at $1.15. The outcome? Momentum keeps going, and that drop below $1 ends up looking like a failed breakdown. Next is the base case. This happens if the market just stabilizes right around here. The outcome would be recognizing this move as a standard relief rally after that brutal drop from the January highs, rather than a full-blown reversal. And lastly, the bear case. If the $1 level fails again, the outcome is that this psychological floor officially flips into heavy resistance, and XRP likely follows Bitcoin down if the broader market takes a hit.
Beyond just the charts, we have to introduce Section 5, the regulatory wildcard.
and the legislation timeline. Potential regulatory catalysts, specifically the highly debated Clarity Act, have hit a major roadblock. The Senate's August recess means any real progress is delayed until at least September. This adds a pretty thick layer of uncertainty to our timeline. Markets can definitely move ahead of legislation just on pure anticipation, but at the end of the day, legislation still has to become reality to actually sustain that long-term institutional demand.
Now we pivot to Section 6, Network Adoption, to look at the on-chain reality.
We've got another really fascinating contradiction here. On one hand, we have a clear bullish signal in the network data. Daily active addresses jumped significantly in August, moving from roughly 26.4 thousand up to 35.7 thousand. That's a really solid bump in activity. But, on the other hand, look at the bearish signal. New wallet creation remained completely flat. So what does this actually tell us? It tells us that while existing users were actively moving assets around, probably trading this exact volatility we've been talking about, the network wasn't actually attracting any new participants. This proves that a sudden spike in trading price doesn't perfectly align with true organic ecosystem adoption.
So, where does all of this leave us? Let's bring the evidence together for Section 7, the final verdict, and review what we actually know.
If we strip away all the emotional hype and those wild social media price predictions, here are the concrete facts we verified today. XRP lost and then violently regained its $1 support, but it did so exactly as Bitcoin and the broader market rallied. In the background, U.S. Treasury liquidity operations doubled, giving the market massive macro fuel, while a huge spike in short liquidations acted as the localized rocket fuel for XRP's 20% jump. Meanwhile, real regulatory catalysts are delayed, and new user adoption on the network remains totally flat. All of this brings us to our final question. If XRP can hold $1 while Bitcoin remains strong, is this the beginning of a genuine crypto risk-on cycle driven by true demand, or is the market simply experiencing a leverage-driven relief rally built on temporary liquidity, one that could reverse just as quickly as it started? Keep a very close eye on how the market reacts to that $1 mark, because the difference between a bounce and a reversal is literally the difference between a trap and a massive opportunity. Thanks so much for joining me for this explainer, and I'll catch you next time.